Okay, everyone, welcome to the channel. If you're new, we cover stock market technical analysis. I give out trade setups, trade ideas, and we use the charts to be our guide. So we're going to get right into it. Give me a thumbs up if you find value in it. Here we go. So triple Qs, here's what we got on, and the reason why I start out with triple Qs is because it's the heaviest weighted sector in the S&P 500. So it's a key, the FANG stocks are the leaders essentially of this market. They've been the leaders for the entire bull market since 2009, and we want to always keep an eye on those to give us direction. So Qs continues to kind of grind higher. You can see on the daily chart we are just kind of working our way slightly higher, not impulsive, just grinding higher, but there's no sell signals. However, we do have negative divergence here on the RSI. You can see it right there on the daily. So all this price action that we're just making right up in here is divergent highs, which means there's a high probability that this price action that we fail and get rejected and sell off. There's no sell signal right now, so it will continue to go higher until you get the sell signal or it burns through the divergences. Obviously, if it keeps going higher and doesn't sell off, we can burn through the divergences with the RSI coming way up here, and that would be very bullish. But as of right now, if I can get my chart right, as of right now, we've got, we do have negative divergences. And that's on the daily chart. If I go to the hourly, I've got this trend line right, or this price channel right here. So I'm looking for a break of this price channel. The negative divergences tell me that we're going to get the break. But you got to wait for that break, and an impulsive breakdown of this channel would be your sell signal, or at least the sell signal I'm looking for. You also have negative divergence on the hourly, so this price action right here is divergent high. So I think it's coming soon, and that's why my video yesterday I said we're looking toppy. We're obviously not at the top. We don't have a sell signal, but it's looking like it's about to reject or sell off. And I think there's going to be opportunity to the downside once we get that sell signal, or if it comes. It's really the same story with the S&P 500. You've got, if I go to the daily here, you've got negative divergences right here on the daily chart. We continue to kind of work our way higher. And these things, typically what I see with this price action is you just grind higher with these little tiny candles, higher and higher and higher, inching up. And then you get the sell signal and an impulsive breakdown, and it usually wipes out all those gains of those small candles when you were moving higher. Doesn't mean it has to happen that way. We obviously can burn through the divergence here, but as of right now, negative divergence. If you go to the hourly chart, we also have, I don't have it marked out yet, but we have basically kind of the same uptrend channel. Not as clean as the other one. So something like that. I'm going to watch the Qs to be my indicator. Where the Qs go, SPY is going to go. But we'll just watch that. And something to kind of take note of, SPY is basically flat. Qs is slightly up. But if we go down to the FANGs, you can see they're pretty much flat today. They're not leading. So Apple, Microsoft, Amazon, Google, they're all basically slightly down to flat. And so the SPY is up on kind of the junk stuff. It's the COVID stuff. I see Boeing is ripping higher, so that probably has a pretty large effect on the Dow. But again, without those leaders, without the leadership, and these are so heavily weighted in the S&P 500 with their market cap that if these decide to sell off, you could have the rest of the S&P 500 moving higher. And if these are selling off, then the S&P 500 is going to go down. So just keep an eye on, it's important to keep an eye on these. Okay, the next thing I want to point out is the US dollar. The reason primarily why the market is going up is because the dollar's losing value. So when dollars lose value, stocks are priced in dollars. It takes more dollars for the stock. So stocks typically go up. Not all stocks, but a lot of stocks go up when the US dollar falls. So here's what I got on the US dollar. We have a couple things going on. We've got this downward trend line right here. I've kind of adjusted it a little bit. I had it previously right here, but I adjusted it to capture this data point that we just made this low. If this holds right here, then we'll just leave this trend line right there. We do have the potential for bullish divergence if the dollar turns up soon. So you can see here where we've got on the daily chart, we're making a higher low right here, and yet price is making a lower low. So this is a divergent low. It is a divergent low as of right now. It just isn't fully validated or confirmed, because if we keep going lower in the dollar, we're going to burn through this divergence and come down like that. So we need to see the dollar turn up soon, and then that would create that bullish divergence. As of right now, dollar's heading down, the momentum's down, and until we see a change in character around that, stocks are going to continue to move higher. Now, the dollar has had a pretty swift move down, so it's pretty oversold. We'll see if it turns up here. I think there's a high probability it does. Let's look at gold. Gold is hanging in there. It's looking good. And so the thing is, I was buying, I bought gold miners. I'm going to continue to add to my gold mining positions around support levels. You can see here on the gold bullion. So here's the thing. I was going all the way back to 2011, 2013. Here's your resistance right there. See the 3 tags of it? Not the overshoot. The overshoot is just a single reaction. You kind of run up and then you sold off. Then you held as resistance twice, 3 times. So that validates that trend line. Now as you zoom in, you can see we overshot it. So we had a breakout in gold. That is a breakout, and it shot straight up, and then we came back in for a back test. And this entire multi-month period, I was saying I thought we were going to come in for a back test. We did exactly come in for a back test. Undercut it a little bit, but it's since recovered. So in general, everything's bullish on gold right now. You've got an undercut of the support level, and it's held, creating kind of a stop rate or bear trap, and now it's impulsively moving higher. You can see, we're up another $7. It's impulsively moving off of this support. So in general, I think that area, or the area we're in down here was the area to be buying or going long these miners and gold, because I think we're probably in for another leg higher in gold basically. So this is a trend trade. We're going to have pullbacks along the way, and we could even pull back and hit support again, but I think we're moving higher. So what does that mean? Well, I think these gold miners are potentially one of the better long trades right now, because they've had a nice sell-off, and they're all hitting major support, and they look like a great area to build a long position, which is what I'm doing. Now, Barrett Gold, if we sell off, there's a potential that if we come down here and break below these lows, and the momentum doesn't make a new low, we put in the bullish divergence on the daily chart. We don't have that yet, but if that starts to show up, I'll continue to probably add to these positions, and we'll kind of monitor that as it goes. Okay, a little update on the BBY trade. So I'm short this position. It's coming close to, looks like it's coming into some support right about there at about 104.20. So likely to get a reaction there or a bounce. So I'll likely be covering just a little bit ahead. I got my order set just a little bit ahead of that support level to cover. And then I would expect a bounce. And then, that bounce will likely fail, and then we'll work our way down to fill the gap, which is sitting around 91. But I am expecting a bounce here at about 104.20, maybe slightly ahead of that. So far that breakdown has played out, from this move for about 10%. And so that's pretty good. So again, that's what we're watching. Snap. All right, so here's the trend line that I have now marked out. We've got this upward price channel. Looks like they popped it up today, intraday, right up to that resistance. I added to my short right up there. So again, as we hit these resistance levels, I am adding to the short. I'm not doubling my position all at once. I'm just adding to it, 10% or so each time we hit resistance. And the reason why I like this to break down is negative divergence right here on the daily. Now this is an aggressive trade, but it's objective. So it's aggressive because we have this rising wedge right here, but we haven't broken down yet. The more conservative way to trade this would be to see a sell signal or a breakdown, and then that would set this in motion all the way down to gap fill down here at 29.26. Let me mark that out. It's right about there. But it's also objective to add at resistance in this pattern. So that's what I've been doing. My first position, I added right here at 44, about 44.20. And so we're down slightly. We're down about, down as of right now, roughly 8% on that position. But again, when I take a short position, I don't just start full position. I mean, I do sometimes, but in this scenario, you hadn't broken the bullish pattern. So you have a starter short, and then you can add to it as you hit these resistance lines. And then we'll start to, likely to start to break down. We'll become profitable pretty early on if the breakdown happens, and then look to take profit as we start to gap fill. Okay, Tesla, they gapped it up today, but we're still below support. Here's your trend line. If I go to the hourly, there's your hourly trend line right there. We can adjust this. It's really more like right there, but there it was. It broke, not impulsive, kind of sideways breakdown, and then they're gapping it up. But again, I think we're likely to, we can move a little higher, but I think we're likely to start to fail here or kind of trade sideways, and then ultimately get some sort of a breakdown. So I'm continuing to watch for that. If you look at the hourly, we have, not the hourly, but the daily here. We've got negative divergence on the daily. It's right there. So this price action all right here is a divergent high, telling you that this was made on less momentum than previously. So it's losing momentum. That's essentially what it's saying. We're running out of steam. Now, we can burn through this divergence if we continue to go higher, but as of right now, we have a divergent high. So we'll just continue to wait for that breakdown. We had the sell signal. Yesterday was your sell signal. Today they gap it up, trying to shake out some shorts is what it looks like. But I think likely tomorrow we sell off, if not today. Neo here, this was the other one that I really liked getting short on. So I started getting short on this thing up here it was a high risk trade up here, but we had this bearish engulfing, and it looked likely that it was going to head down and break support, and it did. And then obviously you had from the break all the way to the lows a 28% drop. So then you have a kickback rally. And yesterday they bought the dip, but you can see what it did. Here's your nearest resistance line at 48.18, and they ran it right up to there, and then it's rejected so far. So I think that's likely going to hold. Maybe they pop it over there briefly, but I think it's likely to hold. And then we work our way lower down towards this more major support line. If I go to the daily here, you can see it right there. There's the trend line. So I think we're likely to come down there, hold and get a reaction there, and potentially even break down, but at least get down to there for now. And these solar stocks look like they're about to break. This is TAN, the solar ETF. You've got a nice clean uptrend line here on the daily chart. See that right there? Very clear uptrend line. And I've been talking about this one in past videos a couple weeks ago, saying I think this is going to break. I'm waiting for certain things, and we never had negative divergence on TAN, so I was waiting for that. It's shown up now. So here's your daily negative divergence. See it right there? So all this price action here is divergent highs. So we just wait for the sell signal, an impulsive breakdown. First level of support I see right there at 57.90. So that's a clear target, likely get a reaction there. But again, waiting for that sell signal. Once we get the sell signal, we'll, I'm going to take a short and short it down to this 57.71. So depending on when we get the break, it's a potential 25% drop or so. We'll go ahead and continue to watch that. Finally, something to keep an eye on. Here's FedEx. And you can see negative divergence here on the daily, and bearish rising wedge pattern right up here. So we're just watching this bearish rising wedge. I've got an alert set. If you get the breakdown or a sell signal of this support line here on the daily chart, that would be your sell signal. And this one has a ways to go. You've got gaps all along here. I mean, you've got a gap right down here, which is likely to be filled if you get some sort of trending downtrend. That's probably about all you're going to get, but that would be a huge move of, 37%. I think there's high probability we get there, because you can see this uptrend right here. This is what they call a thin zone, where there's no trading that really takes place. If I roll back, yeah, maybe you got some trading right in here, so we might find some support right there. But yeah, you can see that this area here, this was your former high, and we just traded straight through it, likely to see a pretty swift move down if we get that breakdown. So watching for that. We don't have it yet, in the name of the game of shorting, which is what I'm more interested in right now, is shorting due to the S&P 500 being in the position that it is. Let me show you that real quick for anybody that hasn't seen. Here's your weekly chart. There's your uptrend line. There's your bull market from 2009. All right, there it is. See the weekly support, held support, broke in 2018. So bull market was broken. The trend, at least, was broken in 2018. And if you don't know trend lines or able to really follow them, then all you see is this choppy zone. We're making new higher highs. But you can see the angle of attack is just kind of a blow off top. Basically, it's just straight up. You don't see that kind of angle really, except for the low right here in 2009. But you don't see that kind of slope throughout this entire bull market. So to me, this just looks like Fed-induced, blow off top, basically. But we're still grinding higher. Major resistance up here around 375, 378. It's ascending, so obviously it's going to continue to move higher. But I suspect we're going to run into that major resistance at some point relatively soon. Not there yet. We don't have the sell signals, so we just let it continue to grind higher. But we're on the lookout for the sell signals. And that's why I continue to look for shorts, because of the S&P 500 chart. So that's all I got, guys. Appreciate it. Thank you. Leave me a thumbs up. If you're new and you want to learn how to use technical analysis to your advantage, learn the skill, take my training course. It's $99. Link is in the description below, and I'll catch you guys on the next one.